Hello and welcome to our episode of FinTech Focus TV with me, Toby. Here in the studio with me today is Zuber Seth from Orchid. Zuber, how are you doing?
Great, thank you for having me.
Listen, lovely to have you on the show. I've been excited about this since it was first mooted. Your business is fascinating. Some of the things that you're doing are fascinating. You're in probably the most innovative space in the entire sector, probably the world at the moment. And within an area there that has been ripe for disruption for a while, but also sort of moving at pace with efficiency, productivity, everything cool that we're going to be talking about within this realm of AI at the moment. So I love the story of the business. Give us a brief overview of yourself and the company.
Sure. Yeah. So I'm Zuber. I'm 22, and yeah, I'm the co-founder of Orchid. Orchid is today an AI platform for asset management. We pretty much automate everything, all the way from model research, model creation, macro research, pretty much every single function of an analyst. We automate today to some degree. It didn't always start off like that. It started off actually as a hedge fund. So we were trying to raise a hedge fund. We had backing from the Kuwait Investment Authority, and we were pretty far along the process. And our entire thesis for the fund was that we would automate pretty much everything wherever we could, right? So doing that, obviously, we started building out a bunch of models, some AI models, some statistical models. And as you can imagine, the FCA wasn't very happy with us being, at the time, 20 years old, running a hedge fund.
Yeah. So
it ended up not happening. But we'd spent so much time just developing everything that it made more sense to repackage everything.
Did you think it would be going through with that, or was it a surprise when the FCA came up?
It wasn't a surprise. I mean, I think I knew there would be there would be a back and forth. So Monzo, for example, right? His name Tom Blomfield, I think. He was 28 when he started Monzo. Yeah. And they rejected his application because he was too young. Yeah. And I was 20 when I started Orchid. I knew it would be a hard road.
What prompted you to decide that that's not somewhere a route that you wanted to go down?
I think it's something
at that age. It's not usual, is it?
I guess not. But it's something I've always wanted to do. So I think when I was 16, I used to play this game quite a lot called Roblox. Yeah. It's an online game, and that has like a whole trading economy and market and everything, right? So I used to trade on Roblox for a while. I think I turned 16, I made a website for Roblox, which is now the biggest website for that platform. I guess around 13 million monthly users, visits, whatever. And that was effectively a Bloomberg terminal for Roblox. So it had all market data, wherever everything was going, if you could track pretty much everything there. So again, being 16, I ended up selling that website. And as I was 16, the only real way I could sell it was for crypto. Yeah. So I was 16 with a bunch of crypto. For a 16-year-old, and yeah, I mean, I just started trading.
Where crypto was 6 years ago, it was it's you've had your undulations in that space since then, haven't you?
There's been ups and downs, but yeah, so I had a decent amount of crypto for a 16-year-old at that age, and yeah, I mean, I did the most rational thing, which was just trade crypto for a bit. I think again, it was more about the markets for me than the actual asset I was trading. So again, it felt very similar to Roblox. It's just now things had real value. I turned 18, started doing the same with equities. At the same time, instead of going to uni, I took a gap year, and I ended up working at a hedge fund and in wealth management for that year. Then while I was at uni, I mean, I was still again working at a hedge fund for 2 years. I started off in business development.
During university?
During university, yeah. Started off in business development, moved over to research, quant research. Yeah. I did that for a bit, so I think it's something I've always wanted to do. It's something I really enjoy. Yeah. So I knew I would start a hedge fund at some point, right? I just thought it would be after when I'm in my 30s, after I've done 5-10 years at a fund, gone to Harvard Business School, gotten my MBA, and then I raise a fund and start, right? So we had an opportunity through a connect who's very close with, I guess, the Kuwait Investment Authority, and they were like, well, look, if you do this now, we'll fund it now. So I was like, why not?
Why not?
Yeah.
Okay. So you're talking through that and saying, right, that's where I want to go. You've done all of this work and to automate everything. You've got a product there that was going to be used when the fund was listed. How did that shift then to the birth of Orchid in its current guise?
Yeah, so I mean, okay, when we started building this, for context, it's been about a year now, right? And it doesn't seem like much, but in the AI space, it's
Dog years.
Yeah, right. 1 year ago, AI couldn't do half what we can do today.
Yeah.
So when we were building this out, it was, again, our thesis was we would automate everything that we could, but at that time, that was a lot less than we can do now. So we started off again with just more basic tasks. So it was equity research and macro research, just looking at running technical indicators, statistical indicators, just doing very, very basic analysis on stocks. And I mean, it had some value. It would save maybe 20, 30 minutes of an analyst's time a day, but nothing substantial.
Dramatic.
Right. At the same time, internally in our fund, our thesis was very different. It was we would automate everything that we could, because if we're not trying to sell it, we can kind of take risks, right? We can play around. And if you have the Kuwait Investment Authority bankrolling you, it's not too much of a risk. So yeah, we automated pretty much everything that we could. At the same time, we started looking forward. We were like, okay, in 6 months from now, we think these language models will be able to do more quantitative work. And they'll be able to do harder tasks that you see at hedge funds and stuff that we couldn't do at the time. So we started building towards that before anyone else was. And it was unfortunate that the fund didn't work out, but what it meant was that by the time we kind of decided, okay, fund isn't going to work, let's package everything together, add more Gen AI, just make it more SaaS product. We were in a position that no one else was in, because no one else had tried doing the quantitative and the hard stuff with LLMs that we were doing 6 months ago. And again, yeah, it's only been a year, but advantage is still there, right? Because again, it just takes time to catch up. And
so that sort of background that you've been in, it was obviously sort of leading up to that, everything you've done had a sort of relevance to it. Moving into a SaaS-based business is a completely new area for you. Tell me about how that journey's been.
You know what? I thought SaaS would be easy.
Yeah.
And it's not. There are days, I mean, I have this conversation with my girlfriend all the time, because I went into this thinking, being like founder mode, and it'll be super, super easy. I can work when I want.
Yeah.
A few hours a day. Don't have to wear suits anymore. Everything's good. It's not like that. It's terrible. It's worse than finance. It's different because there's no routine.
Yeah.
I think that's to do with SaaS, but also just more broadly, just being a founder. There's no routine. You kind of have to set your own milestones. You have to set your own
doing
goals.
Everything, different things every day, different challenges.
Yeah.
Everything's new.
Exactly. Everything's new, and you can't set hard boundaries.
Yeah.
Right. At work, you clock in at 9, you clock out at 5. If you work in finance, you clock out at 7, maybe 10. Right. But you clock out at some point.
Yeah.
No. I get texts at 1 a.m. and I'm awake and replying to them. So
I know the world.
Yeah.
So we're on this journey, and as you said, look, the speed of evolution has been fascinating. Yep. So you were skating. I've used the term before, skating to where the puck's going. You were 6 months ahead of saying that this is where it can go. You took a gamble, a risk on that side of things, and it's been where it goes. And again, in another 6 months, in another 12 months after that, that's where it gets really interesting, doesn't it, in terms of where the whole industry can go. So if you think about what happens next and where the product goes next and where everything happens in the industry, what does the future of AI in the space look like?
Sure. I think there's two ways to approach this, right? So one is from the actual broader just SaaS and AI space and what's happening there, and then more specifically what's happening with AI and finance. I think more broadly, SaaS is dead. SaaS will die in a couple of years max, because it's so easy now to build anything.
Yeah.
I mean, you have Lovable, you have Replit, you have all these platforms where you can just go in a few prompts, build exactly the tool that you need.
Yeah.
So there was like a funny conundrum in Silicon Valley, right? And it was effectively that ideas are worthless, execution is everything. I think we've come to a point now where it's kind of flipped on itself, right? Because you can execute pretty much anything now just using AI. So the only thing that matters is how good your idea is.
Yeah.
And the depth of the actual idea. So I think, more broadly, SaaS is dead. The only tools that survive are not on the application layer, but actually building out the applications and translating that onto finance. I mean, for people trying to build agents in finance, so I mean, for whatever task, investment banking, hedge funds, whatever vertical, there's a limited time frame, simply because it's so easy to do so. With Orchid, I mean, I guess, again, we're lucky to have that hindsight because we just started before. So we realized this around 6 months ago as well. And we've been working towards not being a SaaS company anymore. So in about 2 weeks, Orchid will be the place where you go to create financial agents. So any task in a hedge fund, you just describe it to Orchid. It'll create the entire agent for you. execute the entire workflow for you. You won't be limited by what the platform can already do. It can kind of shape itself and create itself. It can build itself almost. So yeah, I think it's more about moving on to that beyond the application layer, being the actual infrastructure for the industry.
Yeah.
And I think those are the SaaS companies that survive ultimately.
And what does that look like for the industry itself?
For finance?
Yeah. Because it's been, there's so many traditions, and it's such an established business, and there still remains so much conservatism in the space. If we think about the adoption of, I always move back to this. If it wasn't for COVID, I think cloud would have been taking a lot longer to really be adopted in finance. It was the last frontier for it to break.
Yeah.
AI, I still speak to fairly established people within financial services businesses, and they are, they're in the race, but they're concerned because they have to be discussing it. But they're concerned about the approximate hallucinations, approximately right, and going back to your FCA comment, there's a lot there which is which needs to be heavily regulated, and there's worry about that with where AI sets into it. So, you'll speak to some conservative people who say finance is finance, and whilst it'll adapt to it, it'll be there. Then there's other theories where it talks about this being a completely different world in 10 to 15 years.
Yeah.
I imagine I know a little bit about where you sit with that, but tell me about what your vision looks like for it.
Yeah, I think let's break it down first, right? So in finance, obviously you have different sectors. So for the more client-facing roles, I think whether it's if you're raising money for a fund, if you're in front office investment banking, where your job is meeting clients and everything, not much changes, right? These tools just help you do your job better.
Yeah.
So I mean, AI comes in exactly. Yeah. AI comes in now. You can make pitch decks faster.
Yeah.
You can research companies faster, but at the end of the day, it's you who has to go in that room and make that deal, right?
Absolutely.
And I think for those type of roles, if anything, AI brings it back to humans, just because everything has to be so interpersonal.
Yeah.
And if everyone's on a level playing field where they all have access to the same tools, the quality of the data is the same, the quality of the presentations is the same, all the materials that you're presenting are the exact same, because they're made by the same tools. The key differentiator is you as a person and how good you are at selling. Right?
Yeah.
So I think for front office roles, that's how I envision it. For more technical roles, I think for hedge funds, for quantitative finance, the reality is, I mean, AI and computers have overtaken humans maybe 15, 20 years ago, right? So hedge funds created machine learning effectively as a field in the 70s, 80s, 90s. They've been at the forefront of this. The top 5-10 funds make up a majority of the profits that funds generate every year. Smaller funds, discretionary funds particularly, the less systematic ones, they rely on having an interesting portfolio manager, or having an interesting strategy, or just knowing people that they can raise money from. I mean, realistically, most hedge funds get outperformed by the S&P 500 every year, right? It's just that is the case. So it's not like they will get left behind. I think they already have. If anything, I see it the other way. I think AI now creates an opportunity for them to be able to catch up, right? Because, I mean, you had Renaissance Technologies, you had, Brevin Howard, really, really big funds that have invested so much money in becoming quantitative over the past 20, 30 years. You can't catch up with them traditionally. There's no way. Right? So, I mean, for example, I think Citadel was one of the first companies in the world to lay out fiber optic cables, and that was just to reduce the delay on their trading floors from Chicago to New York. So, there's no catching up there. But I think AI levels the playing field. Because now you can outsource effectively a lot of your quantitative work, a lot of the harder work, onto really, really smart models that can do it for you. And you don't need to spend, a few million a year hiring a couple of guys who can do it. So
it's a democratization of the space, isn't it? And I think that's a really interesting thing. Look, we do a lot with smaller to mid-sized firms, and the advance that we've seen in them and how they're looking at things and how they're developing is really exciting. And I think that does, create this opportunity to be able to compete at the top, at the highest level. And that's an exciting area to be in, isn't it?
Definitely.
You mentioned a sort of Orchid having its background in originally starting up to be a fund, moving into SaaS, obviously developing itself a little bit further on at the moment. You said, look, I knew that at one stage I would be building a fund myself. Is that still on the radar for you?
It's on the radar. It's on the radar.
Part of the journey.
Yeah, I think Orchid is, again, our plans with Orchid are huge. Obviously, we want to be the AI infrastructure for this entire sector. We're on course to achieve that. We will, hopefully. But beyond that as well, I think that there's so many applications of this technology. I mean, what we're developing at Orchid, the type of stuff that we're doing, I think it won't be long before you can run an entire fund off just an AI platform. So yeah, so it's on the cards. Nothing concrete yet, but
watch the space.
Yeah, watch the space.
We talked a little bit there about your traditional funds, sort of going through traditional methods, etc., and the difficulties that faces moving further forward. By conscious of not making this a pitch, etc., but I'm really fascinated about how adopting Orchid can give them that competitive advantage to sort of take them from naysayers and we've always done it like this and it's fine and we're all okay, to actually transforming their business and competing at the top level. How do you guys fit into to make that happen for them?
Without making this a pitch, I think, effectively speaking, right, we target a very specific type of fund. It's almost always a discretionary fund, so they're not systematic already.
Yeah.
Because systematic funds, everything is so categorized almost, and everything is so developed that it's hard for something to come in and find inefficiencies. I mean, the fund is designed to be super efficient, right? Discretionary funds, they rely on humans. They rely on intuition sometimes, they rely on strategies. It's more old school, and I think there are a lot of inefficiencies that come with that. So, for example, if you just look at the workflow of an analyst, right, they will spend a lot of time just doing researching global outlook, researching particular asset classes that they're looking at. They'll get given a prompt by their portfolio manager. They'll break it down. They'll analyze each individual aspect, put it back together, deliver as a white paper back to the investment manager.
Yeah.
Right? That entire workflow can be replaced. I mean, there's nothing there that is technical enough that it can't be done by AI models. The biggest issue in this sector is that every single fund is so different. It's very hard to build a product that can do it for every single fund, right? So at Orchid, I think that's the key value proposition that we bring, is that yes, these things can be done already. And yes, you could hire a team of 2 to 10 guys who come and build it out for your fund, and you can be fully AI native and fully automated and whatever. Or you can just buy a product that is built to pretty much strap into any existing fund and make it quantitative. Yeah. And make it, more automated effectively.
So such a game changer, isn't it, in terms of where it sits? So.
Yeah, and I think that the reason for that is, again, because we started as a fund, right? Because we realized that, again, how we work would change, right? And going from my previous fund into starting a fund and, just seeing my friends...
you work for some big ticket places, right? Yeah.
Right. Seeing my friends go to some of the bigger funds, it's every single fund, and even beyond that, every single pod in multi-strat fund is so different that the only way to really capitalize here is to be able to build something that can kind of adapt to all types of workflows. And I think that's something that we've nailed at Orchid, and that's what makes it very, very good at working with asset managers.
That's such an important thing to say. I've worked in the space for a long time, quarter of a century now, and if you go back to 2000 when I first started, it was all about legacy systems that you had to adopt to. Now this sort of bespoke digital tailoring that we're so used to in our everyday lives is so important to recognizing that everyone doesn't have to be everyone doesn't have to be the same. You can adopt and the technology should adopt and adapt to that particular business as well, which is interesting. I want to touch on something which is the sort of one of the key topics of AI, which is AI versus the human being. As you know, our day jobs is in the recruitment space. We're seeing a shift within how people are hiring, where people are hiring. My thoughts on this about it being another shift in terms of what and where people are looking for the right sort of talent, what that talent looks like. So rather than this being a traditional, we're looking for X amount of people who do this sort of thing, there's efficiencies there to say, look, we can get more out of it. My view's always been, you mentioned augmentation beforehand, but I think augmentation alongside shift and seeing what people are doing differently. Tell me how AI, in its sense, in this sector, you think changes the landscape of what human capital looks like. Yeah,
I think it's good for the sector, to be honest with you. As I said before, front office jobs they're not really impacted. Compliance and back office stuff, a lot of it is just tedious work, and I think people who work in these sectors will agree with me. It's just there is a lot of looking through documents, making sure everything's in order, double checking, triple checking. It's very, very tedious and it's not fun, right? And it's not like there's a shortage of work to do. It's just the work takes long, right? So I will say I used to work at the FCA briefly, right? And there was a lot of work to do. I mean, to get approved as a hedge fund in the UK, it takes around 6 months.
How did that work? To jump in, I saw that sort of 4-month stint at the FCA.
Yeah.
Was that to sort of like understand it more from that? So what was the thinking of that?
I think it was at a point where we were like, okay, is it even possible for us to get approved as a hedge fund? So I went and I worked at the hedge fund authorizations team.
So you went on the inside to find out.
And I think it became very clear there's no way we can do it. So,
fair enough. So sorry, I'll let you get back to the script now.
FCA's, they're super rigorous with everything. And if you don't meet the criteria, you just don't. Yeah. So that's just how it is. I mean, again, back on that, right? It takes around 6 months to get approved as a hedge fund in the UK, effectively. There's no reason for that, right? London has probably the most hedge funds out of any city in the world. I mean, and they're all here for a reason, right? You have the human capital, you have good connections to the EU, to the US. I mean, you're in a very, very good market.
Follow the sun model.
Exactly.
Yeah.
Right. And there's no reason for it to take 6 months. The only reason for that is the process is so manual and so tedious, and every single analyst there, an associate, has to look through every single document, go back and forth with whoever's applying to make sure everything is right. Because I mean, if you're trusting someone to manage, upwards of £500 million, you kind of want to make sure that they're legit, right? So it's tedious work. I think a lot of that can be augmented using AI, and what that means is you can get a hedge fund approved faster. That's it, right? No one loses their job, I don't think. People just work faster. Same in finance. I mean, if you're working at a hedge fund, right, and you have the AI, let's say for Orchid, for example, this AI that comes in that can make you twice as fast. It doesn't mean you have half the work to do. You still go home at 8 p.m., 9 p.m., 10 p.m. It just means you're doing more work now.
So this is one of my interesting things. I had a guy, ex-Brevin Howard guy, come in here, Bin Ren, from a company called SigTech. So fascinating chap. And Bin was on, and he talked about the internet. So he talked about how the internet was the dawn of efficiency and productivity, and how the world, and since the internet's birth, we've become less and less productive. There's been a productivity crisis globally. So the view is can AI have the adverse effect and massively increase productivity, which is needed from it? And my concern is does the efficiency gains that we get from AI effectively mean people just do less? Which is always the issue, isn't it? So do we, are we able to say the ideal situation would be, right, we're still doing the same amount of time, but we're getting twice as much done in that sort of space? My concern about knowing humans as I do is to say, we can do less work and still get paid the same, etc., etc., which would feel like a massive waste of everything that we're in. Where do you sit in that camp?
Look, I think SigTech is a really interesting company. Firstly, I think they started off doing something similar to what we're doing. We kind of went different directions, but I think Ben will probably share my view on this. It's in a fund you can't really do that, right? Because again, there will always be a guy who has more drive and who has more hunger, and if that person can get more done, you're out, right? That's always the case in finance. I think it's a very competitive field. I think it's a field where people with a lot of motivation and ambition end up, and people are hungry. And, if you're not,
feed the beast.
Exactly.
I want to talk about this sort of hungry piece, and going back to your origin story that you were talking about with regards to this SaaS world being not quite the founder journey that potentially people read about and aspire to, etc., etc. But it's fun, right? And that sort of effort and time and the 1 o'clock morning, it's all part of building and that journey and everything like that. I looked at your LinkedIn before you came on. And I loved an advert that you'd written for a job you posted for an AI engineer a couple of months ago. And when I looked at it, it reminded me of Sir Ernest Shackleton, who famously put this advert in saying, almost certain death, cold conditions, months of darkness, etc., apply within. And it became the sort of fascinating story of why people came and joined Ernest Shackleton's adventure. You put in something similar in that, and I don't know if it was deliberately around Shackleton, but it was like, don't apply to this job because, and then do if afterwards. And the whole thing was there. It was like, long days, hard work, etc., etc. I love the way you put about it. Tell me a little about what prompted you within that, because it's unusual, and I like unusual in this space.
It wasn't Shackleton, unfortunately, but I think it was honestly just us being completely honest, right? Because I think I was with my co-founders and we were sitting down and we needed to hire AI engineers, and we're just thinking to ourselves, okay, why would anyone want to work at the startup?
Yeah.
Right? Why would you want to work at Orchid? And we thought about it and we're like, you really wouldn't want to work at Orchid unless you see where the space is headed.
Yeah.
Right? Because it's true. I mean, it's not great hours.
Yeah.
You don't finish at 5. You finish if you finish.
Yeah.
Weekends, you have weekends where I could call you.
Can you remember? Right? Can you remember the strapline you put into it about your life's work?
Yeah, this is your life's work. I mean, I think exactly, right? Because
I love that.
My co-founders and I, we're here knowing that what we're doing will cause a very, very dramatic shift in the industry that we're in.
Yeah.
And we're very lucky to be here, right? I think we missed out on the internet. I think there was a lot of money to be made there.
Yeah.
And this is probably the biggest boom of the century. Yeah. I would say, right? It's a great equalizer, and if you come in now, this could be your life's work. So
when you talk about the internet, and this is another interesting phase of this, right? So the internet had the dot-com bubble that came after it. There's always talk about this AI bubble to mirror history. Yep. History is always a great predictor of what comes from it. I don't know if this feels different or it feels the same. I just started up. In 2000, when I came into the industry, I was seeing this huge, growth of businesses, massive investment into companies, people spending money on ridiculous things like lawns in the middle of their offices and all this sort of thing, throwing money away. There's some amazing things I saw at that sort of stage. And then obviously the bubble burst and it took a couple of years to get back into it, but it still progressed to that sort of stage. Obviously, we've seen investment come into AI when it hasn't into other spaces over the last couple of years. And there will be naysayers out there who are talking about an AI bubble in a similar sort of way to the internet bubble. Is that something you're looking at or concerned about?
No, yes and no. I mean, I think there is an AI bubble. As in, there are stupid companies that don't need to exist, right? I mean, you don't need ChatGPT on everything. Not everything needs to be an AI assistant. It annoys me because I open my phone, every single app I go to now has an AI assistant. I don't need it.
Yeah.
Right. So for example, my macro tracking app, I just want to take a photo of the barcode of the food that I want to put in. Right. I don't need an AI assistant. So it's one of those things where I think there will be companies that come in that create something that somehow gets funded and then somehow exists for a couple of years and then dies out. And then I think, again, the dot-com bubble is still fresh, right? People still remember that wasn't that long ago. And I think just raising from VCs, talking to VCs, they're very well aware that there are companies out there that won't make it. Yeah. So there is more scrutiny and there is just more, I guess, due diligence, right? They do their DD and they're like, okay, how does this business survive? Do you actually create value or do you just strap AI onto an already existing product? Yeah. So there will be a test. There already is a test. Yeah. Companies that don't provide value will die out, and those that do will exist. And I think that's always the case. Yeah, throughout.
Absolutely. Whatever it is, be it in any sort of area of business. I wanted to. You mentioned something interesting there about the sort of growth and investment and all those sort of things. You've recently done your seed round successfully. Obviously, there'll be plans there to move further forward. What's it look like? What's the next sort of 6 to 12 months of Orchid look like? What's exciting for you?
Sure. Yeah. I mean, I think this month is a big one for us. Again, closing the round and everything. That's one thing, but also just launching the next version of a product, which again takes away all the limitations it had right now. So I'll give you like a brief overview. So effectively, Orchid right now is made up of a series of AI agents, and they all are very good at one particular task. So when you give Orchid a prompt, it sees which agents that prompt fits into best, breaks it down, and runs it through those agents. Now the problem there is if you have a prompt that doesn't work very well with any of the agents, it will just try and best fit it to whatever agent works with it, but it wouldn't be the best way to actually answer the prompt. So we removed that. The next update, we removed that completely. There is no more agents. Orchid is fully modular, and every time you enter a prompt, it effectively builds itself to be able to answer it in the best possible way. And I think, and effectively, it thinks like a human, right? Because that's what humans do. You have an idea, you break it down, see what the best way of answering it is, and that's how you go with it. So that's big for us this month. And then I think beyond that, I think raising this round and everything, we're in a very, very interesting space where we have to grow very fast, very, very quickly. I think the next 18 months effectively are just growth.
And what does growth look like to you? Does growth mean product? Does growth mean people? Does growth mean customers? Does growth mean all of that?
Sure. I think, yeah, so when we started as a hedge fund, our whole thesis was that we would be very, very lean and automate everything. And I think that's still the case internally. We know a lot of tasks that you would traditionally hire for can be automated. So we will be automating those because it wouldn't make sense for us to
Exactly. You've got to
not do that. But I think customers is big for us. Right now we're working with a bunch of big names, some small names. I think
what's the ideal name for you? What does that look like?
Yeah, ideal name is I think probably a discretionary fund between 500 million to a couple of billion in AUM. 10 to maybe 100 guys in the office. Not too big, but big enough for us to come in and make an impact. I think those are the guys that we want to focus on over the next
UK orientated? Global.
Doesn't matter. I mean, we work with some really, really big hedge funds, like 100 billion plus, and we make an impact there as well. But I think the smaller guys need us more, so we'll be working with them over the next 18 months or so.
Fantastic. And look, I'm sure people watching this have been listening to what you've said and are keen to find out a little bit more. What's the best way for them to do it?
Just text me on LinkedIn.
Let's finish with one last question. So we touched on it before and it's sort of diverted it before. Why shouldn't people work for your business, and why should they?
They shouldn't because it's hard. They shouldn't because the hours are long. They shouldn't because it's startup pay. They should because the equity that they get will be worth millions very, very soon. And they should because Orchid will completely change how asset management works.
Sounds good to me. Listen, it's been absolutely brilliant having you on the show. I'm so pleased we managed to meet, and thanks for coming on. Really enjoyed it.
Having me.
And thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.